chance a couple of years ago as we started to go through this consolidation phase of the market to step back and say, okay, the last market was a multi-year market. Many of the people in the metallic group were with Nova Gold. So you've got a lot of Nova Gold people. We've got some Goldfields people. We've got people from Ivanhoe, Sibanye, Stillwater. And so we really got a fantastic team who've been highly successful in the past. We looked at the opportunities in this, what we think, emerging part of the cycle. And in contrast with Nova Gold, we didn't see necessarily large, already well-defined resources that we could go after. What we saw was the opportunity to take advantage of the low part of the metal price cycle to go after brownfields assets that were in districts where you didn't have a major, that you had a junior, smaller operator, one mine company that was running it, and they hadn't therefore acquired all the exploration potential in that district. So we're going into areas that have the benefit in comparison with the Nova Gold example of existing infrastructure, mines already in place. In the case of the three main projects, we've got some of the highest grade producers or mines in that space that are already in these districts. And so we've assembled really a strategic value just in these district scale land positions. The additional filter for us was that we saw an opportunity to go after those acquisitions during the low price part of the price cycle, and that we saw the potential to apply innovative approaches to exploration and new technologies and new exploration models that hadn't been applied before. And so really looking for the opportunity to be able to get into a place where it kind of gives us a multi-part exit strategy. You know, really simplistically, if you've already got an existing mine in the district, if we find something modest in size, we can basically undertake some kind of agreement with the operator next door that becomes incremental ore, and they can fast track that to production for us. If we find something bigger, that party may want to acquire us to get access to that strategic value from that ground. Find something bigger still, we attract one of the majors in the industry who comes in and does a complete district-wide consolidation. And so I think that's really the philosophy that's brought us together. And by combining this team with a long history of exploration success and in terms of discovery and being able to advance projects in the districts that we're working in, I think we're really putting together some exceptional value. So if we take a look at, as I said, many of the team were part of Nova Gold. So in Nova Gold, it was a little different strategy, as I said. We were going after assets and we were putting them all into a single company. Subsequently, Nova has focused just on Donlin. Galore got sold to Newmont and Teck, and Ambler got spun out as Nova Copper, which is now Trilogy Metals. But effectively, the opportunity in the last bull market cycle was to go after these assets that were large, had huge potential, put the team's expertise into expanding those resources and growing value. And Donlin and Galore each, traded at one point at over $1 billion in value. And even just Donlin alone today, I think the market cap of Nova Gold is $3 billion. So it was some tremendous value creation. We see that value creation really resulted from, one, acquisition of those assets, the low part of the cycle. Two, being able to rapidly expand those and grow value in a market in which resource advancement and development was valued. In this market cycle, we've had the opportunity to go after 4 opportunities. The first one starting in 2016 to pick up and consolidate the other half of the Keno Hill Silver District. The potential we see here are 50+ million ounce silver deposits that are of the size that the majors are looking for in a district that we think has the potential to be a Coeur d'Alene scale, multi-billion ounce district. And we see that from the exploration potential as well as the history of mining in the district. The second opportunity that came into the group went into Group 10 Metals. This was the lower Stillwater complex. So applying the model from the Bushveld in South Africa, that we see the lower part of the complex has potential for bulk tonnage type deposits. And so we've acquired this ground. We've got multiple targets that have historic drilling that tell us we're in the right part of the system. The target here, again, is 10+ million ounce system. So this would be like a Donlin Creek scale analog in the platinum, group metal, and nickel space. A third opportunity in 2018 went into our copper company. This is the Stu project in the Carmex Minto copper belt. We've already got a 1 billion pound copper deposit at Minto. At one point, it was the highest grade open pit copper mine in the world. We think we've got the potential for 1 billion pound plus resource development on the Stu ground, which sits in between Minto and the Carmex deposit. So the target here are large scale copper plus gold silver systems, bulk tonnage, open pitable systems. So that's the newest opportunity in the group in terms of the company with Granite Creek. The most recent opportunity came in and has gone into metallic minerals because of the combination of elements. But the La Plata acquisition, I would say the analog here would be this is a Galore Creek type copper, gold, silver porphyry system with a Keno Hill silver district wrapped around it. So it's a combination high precious metals porphyry system that already has significant drilling that was undertaken by the majors, Rio Tinto and Freeport. And wrapped around it is a high-grade silver gold district that was the focus of historic mining that we are really taking a combined first look at. In the case of all four of these, they all have significant historic data, significant drilling and other results that tell us we're in the right part of the system, let us understand the geology, and really be able to map out a process that we think we can rapidly take these three companies and the respective projects to resource definition, and then eventually to advancement and development. So the model here that we're really using is moving, really when we step back and look at value creation in the mining space, really the most rapid value creation you can see is that opportunity to take a new discovery or an older discovery that you advance and move that quickly to the resource development stage. And in our assessment, that's where you create the most value the most rapidly in our space. The second opportunity is at the PEA stage to take something where you're starting to understand how big it is and advance it over a number of years to feasibility stage values. But when you look at the value per share, you can take an opportunity from this early stage where the market is valuing it at exploration stage, which is really the team and some element of the cash and the property, and be able to drive that to a tangible resource stage value. You often can see valuations on a per share basis that you won't see again until the feasibility stage, with a lot more shares issued, a lot more time, and a lot more cost. So we're really focusing where we see the opportunity in these four large scale, what we believe are world-class potential assets, to move them rapidly from historic drilling that's pre-resource to taking them rapidly to a resource stage. Really the objective this year would be to try to advance those in 2020 for all three companies. If we look at the example in real life of the Nova Gold advancement, when we picked up that first asset, the Donlin project, we were trading in the share price and share structure very similar to the companies in the metallic group, around 15 cents a share. The advancement of Donlin basically allowed us to create massive value. As Barrick came in and it left Nova Gold open to do something new, we acquired the Galore asset at the bottom of the copper market cycle and basically drove that value through resource expansion drilling and advancement. And though in Nova Gold, as I said, it was putting multiple assets into the same company, our model here with the metallic group companies is to have more fit-to-purpose companies, a silver and gold company, to have a PGM battery metal company, and a copper company. And we believe the fundamentals, as we'll talk about at the end of the presentations, as we talk a bit about the markets, we think the fundamentals for precious metals and for particularly nickel and copper on the base metal side are really positioning us for what we believe can be a multi-year market. And with these particular assets to potentially reproduce something similar to the Nova Gold pathway to value creation. So I think with that, We're going to go ahead and, I think, jump into the first presentation. What I think you're going to see as we start to talk about the three companies is you're going to see a similar business approach. You're going to see a similar strategy in terms of the way we put together the land package. And I think you'll see, though they're different metals, you're going to see the similarities with the way that we've approached this in all three companies. Picture the Caribou Advanced Target Area from our drilling there in the Keno Hill Silver District. All right, so many of you are already familiar, but I don't think it hurts to just quickly touch on what the focus has been for Metallic. We founded the company in mid-2016. Really, the initial focus was in the Keno Hill Silver District, which is one of the world's highest grade silver districts. I think the combination of being in the Yukon, lack of infrastructure, it hasn't seen the development as much as other districts, but 200 million ounces of very high grade silver. And in just the last few years, you've seen over 70 million ounces of measured and indicated resources and another 25 million plus ounces in inferred. So taking it to another 100 million ounces. Particularly the Flame and Moth and Birmingham discoveries for Alexco, 60 million ounces. I would argue the Birmingham deposit is the best undeveloped silver mine in the world in terms of grade, shallow nature of the deposit, and metallurgy. And that's really the target type that we're pursuing in the Keno District under Metallic Minerals. Over these last couple of years, we've consolidated the second largest land package in the Keno District. We've done that through really painstaking acquisition of 40 different land packages, but doing it at the low part of the metal price cycle. Our focus here has been to assemble the layers of geologic information, to bring all this historic data in, and understand and prioritize the targets to be able to move things as quickly as possible to resource definition and eventually development. We'll talk a bit more about the recent acquisition at La Plata. And we've also got the alluvial royalty business that we're working on. But the focus really here over the last couple of years has very much been on Keno. So if we look just quickly at what have we accomplished in the last couple of years and where are we going? We've quickly gone from a raw package of historic data with various vintages of geologic mapping, geophysics, and other data, and started to assemble that, to enhance it through various geophysical surveys, surface surveys, our own drilling. What I can say is that we've been successful in already drill testing 3 of the advanced targets. We're hitting Keno type high-grade silver in those systems. We're having about a 90% success rate in those targeting exercises. And we're now stepping out along those productive structures to be able to build tonnage and look for where those vein structures widen out to be something more similar to a Birmingham. In addition, the big development for us last year was this definition of 10 multi-kilometer footprint targets on the eastern half of the district. This is a side of the district that's never really seen systematic exploration. The scale of these targets are much larger than anything that's ever been seen in the district. I would say this combination of these advanced stage targets in the central and west part of the district that we're working on, plus the large scale, these early stage targets was a key factor in Eric Sprott's strategic level investment in Metallic last fall. He really sees this district as having huge potential, that it's underexplored, and we share that. And as many of you will remember, Eric was one of the early investors in NovaGold. So we're really excited to have him as an investor in the group. So we've got some exciting work we're continuing to do on Keno. We're doing modeling. We're getting ready for the next level of drill testing and stages of drill testing, so that there's still lots to come there. In last fall, we acquired the La Plata silver, gold, copper district. So this is a combination precious metals, porphyry, and epithermal district. This has got significant drilling in the district already. We're doing modeling on that. Our objective is to quickly move that historic resource into a modern 43-101 category. And we've undertaken the first sampling programs in the district in terms of geology, in terms of geophysics and soils. And so we're really starting to build and apply some of the same tools we've used so successfully at Keno to the work here at La Plata. In addition, we are working on our royalty portfolio, and we're optimistic that we're going to be able to have multiple operators this year that are working on that, and looking forward to the first one moving into significant production. We've talked about the team. So just a quick snapshot, remind you where Keno is in terms of the Yukon. You've got Whitehorse, the capital here. This is the Yukon territory. You've got British Columbia, Alaska. The year-round deep sea port at Skagway. There's already an existing concentrate shipping facility there. A highway continues up past the Carmax Copper District, where Granite Creek Copper is focused, right next to the highway, on up to the Keno District, Mayo. You've got highway, you've got grid power, you've got all the infrastructure that you need. And of course, Dawson City, where our alluvial portfolio is located just over here. Zooming down into the Keno District, here are the holdings for Alexco. The mill sits here in the center of the district. Our land position is on the east and to the south, down dip, and in some places internal. The McKay Hill project is another historic district, also high-grade silver and base metals up near ATAC. Across the valley is Victoria Gold, who's recently gone into production with their large-scale open pit gold mine. It's a really active district with lots going on. Our neighbor Alexco has done twin declines, one to the Flame and Moth deposit, one to Birmingham. They've refurbished the mill. They are just waiting for one last permit to get started at 800 grams per ton silver. And if you add the other metal values, 1,100 grams. This is top in class, highest grade operation in the world. At 4 to 5 million ounces of silver a year, that will make that a top 15 silver mine. And this is only at 400 tons per day. That's quite small compared to many operations that operate at thousands of tons per day for the mill. So it would be quite straightforward to look at an expansion to 600 tons. It'd be quite modest capital. That could take you to a top 10 silver mine in the world. Or if you took it to 800 tons, you could potentially be a top 5 or 6 scale producer. Under $11 an ounce operating costs. That's because these are shallow deposits that start right at surface and are high grade. And total capex to do that development for two different 30 to 50 million ounce deposits, just a little over $20 million. So this is low capex. So if we found a Birmingham on our ground with the road access and the mill in the center of the district, the capex would be quite modest to be able to develop it. Mine life a bit short, but that between their exploration and what we're doing, we're quite confident to be able to build on that. And that's really our key focus. I would guess, depending on markets and metal pricing, Alexco continues to hold to their restart here in 2020. Just quickly as a reminder, what does a Keno style vein look like? This is underground at the Bell Keno mine on trend with our own holdings. Between the two red lines is the vein structure. You can see the sulfides that make up about 75% of the material. This is a cross cut across the ore body. Post rocks being the Keno Hill quartzite that you can see on either side. These are basically brittle rocks. So we've got structures, productive structures that host the mineralization. And our challenge as explorationists is understanding where those structures are. They're very thoroughgoing. So if you can understand where they are and understand the subtleties that cause them to expand out to a wider mineable zone, that's really the key to success in this district. So quickly looking at our targets in the district, we're looking at a geologic map of the Keno Hill Silver District. The orange circles represent the largest of the historic producers. The yellow circles are the new resources in the district for Alexco, a part of the new mine plan. The red circles represent high-grade historic producers that are on our ground. By that we mean these were mines that were being mined in the 20s and 30s. They were high enough grade to be mined by hand. And we're just now doing the modern exploration to look underneath them. The district is 35 kilometers wide from Silver King on the west, Cobalt Hill on the east. So that's the size of basically Vancouver, Boston. It is a very large area in terms of the scale of the district. In red are these early stage new discoveries we've made just in the last 2 years. There isn't a drill hole beyond Caribou. So these are really virgin untested targets that we'll talk about a little bit in a second. And in black, these are our 6 advanced stage targets where we already have initial drilling at Caribou, Homestake, underground test work at Formo, and surface work at Silver Queen. But those are our targets that already have drilling or surface work that shows high-grade Keno-style mineralization around its surface and that we're going to be advancing on. The red targets are these much larger scale soil and rock targets that we'll be looking to put first drill holes in this year. What I'd really kind of point out, overall district, just under 300 million ounces in past production and current resources. The deepest mine in the district, the Calumet, just 300 meters from surface. And the deepest holes that have been drilled are at the new discovery at Birmingham, and the resource is less than 400 meters from surface. So we're not drilling 3-kilometer deep holes like they are in the Coeur d'Alene camp. We're still drilling things that are right at surface. We're focusing our exploration along these productive trends, with the advanced stage targets being right on trend with some of the biggest producing mines in the belt, and the early stage targets, same geology, same type of setting, but because it did not have road access until recently, they really basically have been untested. And so we're quite excited about those next steps. Zooming into that soils samples, just to kind of highlight that the pink here are more than 90 grams per ton silver in soils, very high level response. So we've got multiple targets that are 2 to 5 kilometers in length. We're doing the refinement work. We're doing some additional geophysics and modeling to be able to advance those. But the scale of this target, for instance, at Fox UKHM, is twice as big as the Birmingham trend. That it has the largest 150 million ounces of past production in current resources. Shifting to the recent La Plata acquisition here in the Colorado Mineral Belt. Again, it's a historic district that it very recently has seen more modern work. You've got Cripple Creek with Newmont with over 30 million ounces. You've got twin porphyry systems being mined by Freeport. Over 50 million ounces of gold and over 500 million ounces of historic production in silver. Multiple districts, very similar to the Keno Hill, mined from the 1800s to the 1940s, and really have not seen modern exploration. So looking at the La Plata district specifically, the opportunity here, this district was really explored and mined for its high-grade silver and gold deposits. From really discovered back in the 1700s all the way through the 1940s when the US shut down mining during World War II. Post-World War II, you have Rio Tinto and Freeport come into the district. They recognize there's a high-grade porphyry system in the center of the district, put 49 drill holes into that. But of course, at 60 cents a pound copper, they were looking for 1% bulk tonnage copper grades. Well, we don't necessarily have a bulk tonnage target at 1%, but we probably have one that's over 0.5% and has very significant silver and gold credits that come with it. And outboard from that are the actual historic mines that were 90 different mines and prospects in the district that we're also focusing on. So we've launched exploration in the district. We're doing modeling of the 49 drill holes that define this porphyry system. It's open at depth, it's open laterally, and we have defined multi-kilometer scale precious metal systems on either side of the porphyry system. So the simple model here is we've got something that is an alkalic precious metal rich porphyry at the center, very similar to Galore Creek in terms of its genesis. And on the outboard of that, you've got something like a Keno Hill high precious metal structurally controlled deposits that we're pursuing in a twin focus here on these. So results will be coming from our most recent programs here. We're doing modeling at La Plata, and so we expect to have a series of announcements coming out on La Plata here in the near term. Likewise, at the Klondike Gold District, we've already got 4 separate leases on this package of land. We're the largest unmined landholder in the Klondike. We've got permits that are being completed, covering another 8 kilometers of the Australia Creek area. So we're talking already with multiple operators. The model here, lease the ground, give them 5 to 10 years of space to be able to work, give them a couple of years to do their exploration, and then they start producing and they pay us between a 10 and 15% royalty on the ground. So next, kind of a summary of kind of achievements over the last couple of years, next steps. The work focused initially at Keno Hill with the acquisition of this second largest land district, amalgamation and unitization of the Keno district. That massive data mining exercise of prioritizing targets, first drill testing in 2018 and 2019 on the Caribou and Homestake, and basically advancing those to mineral inventories, acquisition of La Plata, getting our teams on the ground, starting to look at the historic data and integrating in modern data. So the priorities for 2020 are really focusing on what work can we do to advance the targets at Keno and La Plata to 43-101 mineral resources. 81 drill holes at Keno, 49 drill holes at La Plata. We can take that data and combine it with our more recent sampling and move that towards resource definition. Second will be prioritizing the targets for expansion drilling, moving out from what's known to build on those mineral inventories and resources, and drill testing some of those earlier stage multi-kilometer scale targets. News flow for metallic minerals is very much going to be coming on, starting with some Keno results in terms of the modeling work that we've been doing, particularly on the advanced stage targets on the west. Field results showing expansion of those surface targets on the east. Results from the field program at La Plata. The drill results sections and modeling from that La Plata drilling. And then you're going to see a series of other news releases as we start to prepare to go back into the field, hopefully, by about mid-2020. So last thing we'll just touch on, share capital structure. We are sitting at just 99 million shares right now. We've got $3 million in the bank. We have no debt. So we're in really good shape right now. We're fortunate in metallic minerals and in the other two companies, as you hear on Group 10 and Granite Creek, that a lot of our work right now is desktop modeling. It's doing work that we can do from the home office and create a lot of value. It doesn't cost a lot, but that work is going to move us systematically towards resource modeling. And then as we're able to undertake airborne geophysics, which potentially should be able to be undertaken even with the coronavirus situation, we can prepare and refine the models for expansion drilling as we start moving forward. So we're really in shape right now to be able to achieve the next major milestone. If we can build on that with drilling this year in the field, fantastic, it adds to that, but effectively being able to advance the company forward. We've been trading very much in line with the sector. Here's the SILJ. Here's the venture index, which is kind of the best indicator of the junior space. We had a nice bottom for the sector back in middle of last year. Nice run. Everything has kind of rolled over together, but already we're seeing the precious metals start to bounce. We're seeing the precious metals equities looking like they're being positioned to see a nice move forward. And as we'll talk about at the end of the presentation on some of the market slides, we think this is setting up to be potentially a similar situation to what we saw in 2008 and 2000.
As Greg mentioned, Granite Creek Copper is the newest member of the metallic group. Even though we sort of cleaned the company up and relaunched in 2018, we closed the acquisition of the Stu property in January 2019. So this is really only our first year of being in operation. As mentioned before, our project, the Stu Copper Gold Silver Project, is in the central Yukon near the village of Carmacks. You can see we're on paved highway with access to the port at Skagway. And you can see that we have, as with all the other companies in the group, we started our focus in the Yukon. You can see metallic minerals up there to the top, and the Group 10's Kalani projects down there as well. After we acquired the project, we were able to acquire a large, previously privately held database that gave us some very interesting data on the belt. The project located within the Minto Carmacks copper belt, which is a belt of rocks roughly in that area there, that hosts some very high grade copper, gold, silver projects, both in the oxide domain and sulfide domain. You can see just to the south of us, the Carmacks deposit owned by Copper North. We are a 30% holder of Copper North, giving our shareholders access to a resource. And then to the north, the Minto mine owned by Pembridge Resources. put back into production last year, and they're ramping up there and they're doing good work. We have very good infrastructure. We're close to paved highway and power, and we have road access into our project. After we acquired that database that I mentioned earlier, we were able to develop 4 multi-kilometer scale targets based on soils, historic drilling, and historic geophysics. So that gave us a great start, a leg up. We had crews in the field this last field season, following up on some of those targets. We did some geophysics and we did some multi-element soils, just to bring some modern techniques in. And we've also focused primarily, or will be focusing primarily on our central target. And the reason for that is the highlights of the drilling done in the 1980s by United Keno Hill Mines. Show some really nice numbers, 3.4% copper, 1.8 gram gold, 13 gram silver over 13 meters. And we think we can be able to expand on that. And one of the things I want to talk about today is this map here. This map is from our news release that was put out yesterday. In going through the historic data, we discovered a large geophysics survey that was flown in 2008 that, as far as we can tell, has never been released to the public. So we've recently acquired all of that data and are going to start doing some work with that and modeling that and see if we can get some interpretation on what it means. This map is magnetic data. And we know from discussions with other operators that magnetics work very well within the belt. You can almost direct detect mineralization. So if we overlay our targets that were developed from the geochem over the mag, we start to see some very interesting things. One of the things we see in zone A and zone B along the edge of this mag feature here is that things start to line up quite well. And what we're looking for in the magnetics in these situations is where there is magnetic contrast. So when you see from a high to a low, that is a good place to follow up. So what we've done already, just with a preliminary look at this, we've gone from small targets in A and B to be able to look at prospectivity on either side of this mag feature. And again, why we like zone A is these high grade intercepts that we hope to be able to expand on and develop. And then if we look at these areas down here, we can see the copper north zones of mineralization are held within these ellipses here. And having this data, we can look at the magnetic signature in those, and then we can project that onto the STU project and further develop targets. Here we have a figure of the Minto mine. You can see that is now back in operation. It's underground now. But when these pits were in operation, it was the highest grade open pit mine in the world. Grades are still pretty good there. You know, at 1.6% copper, 0.6 gold. That's not bad. And if we look at the Carmax deposit, which is adjacent and south to us, we see comparable grades, but in an oxide domain. On our property, we have both oxide and sulfide potential, and we think that at some point the combination of the properties will be able to make something economic. Next steps are Granite Creek. Just to reiterate how we got to where we are, completed the acquisition in 2019 of the property, subsequently acquired a large historic database. We also signed a data sharing agreement with Copper North, and that data sharing agreement allowed us to review their historic drilling, geophysics, and geochem, and allow that to inform how we developed and explored our own property. Using all that data, we developed 4 multi-kilometer target areas. We completed initial field programs on those target areas, and then we acquired a 30% interest in Copper North, again, giving our shareholders access to a published resource published in 2016. In 2020, we acquired the data from the airborne survey that was previously referenced. And now what we're looking to do in the rest of 2020, we're going to reprocess and interpret that airborne data to develop targets. We're going to model a historic drilling in the A zone And the purpose of that is to determine what it's going to take to bring that up to a 43101 compliant resource. Part of that likely is going to be relogging and resampling some of the historic core. We know that some of that core had not been sampled previously, so we've got a bit of work there. We're identifying and prioritizing new targets based on the new data that we've acquired. And we're also looking at remote sensing surveys where we'll be taking publicly available data on from satellite data that's available and processing that to look at alteration structures and helping us move forward. Upcoming news, you can expect some news on our data reprocessing and target generation. You can expect news on the modeling of that historic drilling. And we're still looking at what our 2020 exploration field programs are going to look like, but we expect to have something that we'll be able to do on the ground. Our share structure, roughly 46 million out, 2.9 million options, 29 million warrants. The average price of those is 19.5 cents, fully diluted, 79. Cash and marketable securities give us about 970,000 cash on hand. And that's it for me. And if there's any questions, you can pose them and we'll do a Q&A session after we've heard from Mr. Rowley.
We are, of course, a growth stage exploration company. We're pre-resource, but as you'll hear updates today, we are working on that actively at Stillwater West. That's our most recent acquisition and quickly became our flagship. We also have the Kluane PGE nickel copper project in the Yukon, where we had joined the Nickel Show deposit, formerly Wellgreen deposit, now in active development by Nickel Creek Platinum. And we have in Ontario the high-grade Black Lake Drayton gold project. This adjoins 4 million ounces, high-grade ounces in the district, including Treasury Metals. They're on their way towards building a mill. And all of these assets were acquired during the bear market cycle. We have district sale assets, 100% interest. And in each case, we're adjacent to world-class mines and deposits. And we've brought together substantial databases with new geologic models and world-class teams. And that's a theme that you heard Greg and Tim relate as well. That's how we like to do things at the Metallic Group. With that, you get the potential for world-class discoveries. And that's particularly true at Stillwater, where we in 2019 had a very big year. We proved our Platte Reef in Montana deposit model, and we're rapidly advancing these drill-defined mineralized zones, as we'll talk about here today. At Stillwater, it's primarily a nickel-copper sulfide system, but it is, of course, famously rich in palladium and platinum, also rhodium, which is not shown here, and cobalt and gold as well. And so we do have the tech-grade nickel, being nickel sulfide, as it's a magmatic system. And it's worth noting that the US has been taking measures to secure a domestic supply of 5 of these commodities, the PGMs, nickel, and cobalt, as they've listed these as being critical. And they're looking to secure a domestic supply. And this is very good for us, as we, of course, are in the US in some world-class geology for those commodities. Speaking of the geology, there's a look at the Stillwater district. There are essentially 2 holders. There are us in yellow and Sibanye Stillwater in gray. Sibanye, of course, a South African gold producer that purchased the Stillwater mines in 2017 for $2.2 billion. And they closed that deal just after we announced our acquisition of the claim block shown in yellow there. It's interesting to note that since then, in late 2019, Impala Platinum has purchased North American Palladium, being the other primary PGM producer in North America. That's an interesting trend of these South African miners reaching out of South Africa, diversifying. And Sibanye themselves recently commented that they were interested in more acquisitions in North America and even in base metals. So that's very encouraging. We have a 100% interest on that 54 square kilometer claim block. And between the 2 companies, we basically control the 40 by 8 kilometer Stillwater complex. And this resembles South Africa's Bushveld complex, and we'll get into that in some later slides here. Stillwater is known for the JM Reef deposit. This is the highest grade PGM deposit in the world and one of the biggest with 80 million ounces. It's being mined at 3 spots, 3 active mines in the district. And Sibanye also runs a smelter and refinery complex up in Columbus, Montana, about 60 kilometers off the northeast there. It's worth noting that even though the JM Reef is known for its palladium and platinum, it is actually a nickel copper sulfide deposit. So their systems, they are actually smelting nickel copper sulfide products, and that's potentially very interesting to Group 10. Quick look at geology to draw that Bushveld comparison. Stillwater is a layered system, and in the upper portions of these systems, in green here, you get the reef type deposits. The banding is visible, and that corresponds very nicely to the traditional reef type mines of the Bushveld complex. Most of the world's platinum, of course, comes from the Marinsky and UG2, and that corresponds nicely with the JM Reef at Stillwater. In the lower portions of these systems, in the oranges and purple here, you get larger magma mixing events, and that's the Platte Reef setting for these larger deposit types. That's particularly apparent in the north limb of the Bushveld, which is the Platte Reef district, where you get Mahalaquena's Mahalaquena being Anglo-American's mine, and Ivanhoe's Platte Reef mine now in construction. 400 million ounces PGMs and gold in this district, tens of billions of pounds copper, nickel. That's our deposit model at Stillwater. Deposits that are tens to hundreds of meters thick, kilometers long, disseminated, net textured, and massive sulfides rich in PGEs and gold. And you have here on the screen 3 of our earliest, our most advanced target areas, which we'll touch on in subsequent slides here. So at Stillwater, that whole complex has been tipped up by the mountains to the south. You get this mining friendly angle now where mineralization comes to surface. Again, the reef type systems in the upper portions in the green, and that's where you get the JM Reef, Marinsky Reef UG2. There's the JM Reef at Stillwater and the current mining operations up to about 2 kilometers depth. And our Picket Pin deposit above them in that layered system. We have, based on our data compilations, 6 reef type target areas. These are kilometer scale at Stillwater West. Our focus, however, again, that Platte Reef style system. So big systems, 10 to hundreds of meters thick, bulk mineable, and like Anglo-American's Mahalaquena, Ivanhoe's Platte Reef. We have 8 kilometer scale target areas for deposits of this type in Stillwater. And again, those 3 most advanced areas based on drill-defined mineralized zones to date. The camp, the HGR, and the hybrid unit. And we'll be following those in a subsequent slide here. Interesting to note the position of the hybrid unit. That our current thinking is that's an intrusive dunite. And that gets very interesting because these were very high grade in some of the earliest mines in the Bushveld. In addition, we have targets in the lower portions as well. So this slide looks at our data compilation efforts to date. We've zoomed in on 6 of the 8 Platte Reef style target areas, being the big blue ellipses. We have Fugro-Digim survey here as the background, with the conductive highs being the purples. These are the highest level conductors you can get, and that's indicative of copper nickel sulfide mineralization. We also are blessed with more than 200 holes in the drill database, 205 from past drilling and 5 from our work in 2019, and 28,000 meters of drill data plus 1,600 meters by us in 2019. So we're nearly 30,000 meters of data now. With that, we've been able to model 5 mineralized zones. One of the lesser advanced ones is the crescent target area shown here top right. Earlier stage, but compelling nonetheless. In 2019, we did some relogging of past core on this target area to bring that into our developing block model. And you can see some compelling intercepts here. 5 holes, for example, at over 100 gram meters grade thickness. For reference, the Stillwater mines beside us, the JM Reef, they're 34 gram meters of grade thickness. So over 100 is getting to be significant, including 4 meters there at nearly 3 grams PGE. Second of the less advanced target areas is the Pine Shear Zone on the Wild West area. This is an interesting system. It's a north-south trending shear zone, right about there. And it's high-grade gold, which is incongruous with some of the rest of Stillwater, although we are seeing high-grade gold in portions of the Iron Mountain as well. But 8 meters at 16 grams per ton, very interesting. In 2019, we reassayed some of that historic core from the 2000s. We also relogged a lot of core to bring it into the model. We're focused in particular on 3 areas, as we mentioned earlier. The first of those 3 is the HGR target at Iron Mountain. 24 holes here, and define a nice big area, 850 meters strike, tested to a depth of 300 meters to date, but as you saw, that's generally open at depth by the orientation of the mineralization. We drilled this in 2019. We also reassayed, relogged past core, and we're very pleased with the way the block model is shaping up here. In 2019, we returned that lovely intercept, 272 meters at nearly 2 grams platinum equivalent. And that includes this 27 meters at over a gram 3E and Platte Reef levels of nickel and copper with a little sweetener of cobalt. You'll see some rhodium assays shortly from this region as well. This is very compelling, and it's fitting that Platte Reef model of tens to hundreds of meters thick copper nickel sulfide enriched in PGMs and gold. Camp zone, similar to Iron Mountain HGR, a lot of work by AMAX here in the 60s and 70s. They in fact gave us these numbers here. There's a nice mineralized zone there. It's running about 0.42 nickel, 0.23 copper. And we have limited PGE data, but where we do have that data, it's showing a nice kicker on top of that in terms of PGE values. And we're bringing that into the model as we speak. We drilled this in 2019, and that gave us that 400 meters at 1.1 grams. And that was reported a couple of months ago. All these areas are open for expansion. Lastly, the Chrome Mountain unit, the hybrid unit, Chrome Mountain. This is the possible intrusive dunite pipe, drilled in 2007, and we relogged and reassayed a lot of core from this area. Drill results of that effort will be put out shortly here. Oops. You've got some indications there, 388 meters at a gram total platinum equivalent, and 118 meters within that at over 2 grams. So there are the 3 most advanced target areas that we are now advancing towards inferred mineral resources. It's worth noting that all of our work to date has been based on historic past drill pads and often past drill core, with the exception of what we drilled ourselves last year. We are now fully permitted to get out and step away from the past work and really go after this Platte Reef model and test these conductive highs here that have not been tested to date. There's been no systematic test of Stillwater for these Platte Reef style systems. The last point is that we've engaged gold spot discoveries, and this database presents a wonderful opportunity for them. We're already excited by the preliminary targets coming out of their work. They've already given us preliminary targets on the west side of the property in earlier stage areas, less advanced areas that look quite a bit like Camp Zone in terms of the conductive high that we're seeing out there. So those are compelling and will be followed up, of course, in the coming seasons. Okay, next steps. There's a lovely look in the core shack. You've got Dr. Broughton of Ivanhoe, who joined us in 2018 as an advisor. That was a major step for us, as that brought that validation of the Platte Reef model. And Dr. Craig Bowe, our chief geologist, who's an expert on these systems. There's some of the core we have in the shack. 2017 was a good year. We made the acquisition, expanded it, completed our initial field programs. 2019 was our step out year. We debuted at the Core Shacks here in Vancouver, attracted the interest of basically every major that you can name that's relevant to the space. And we drill tested our priority targets ourselves and brought those into the block model. We also announced our collaboration with Goldspot, and this is the application of artificial intelligence and machine learning in exploration, which is very exciting when you've got a property this large, this prospective, and with this kind of database. It should be a lot of fun going forward. Our priorities for 2020, of course, convert those mineralized zones to formal resources, and we're actively working on that now. We also see a way to expand the known mineralizations into untested areas and identify and prioritize new targets. So upcoming news flow, we've still got exploration results from 2019 that we are compiling, working, and reporting. Chief among them, the Chrome Mountain drill results, and then rhodium assays and results of our earlier stage programs. Later in the year, we'll be reporting on our block model results in the most advanced areas. That would be the 3 zones that we touched on, and also our results, or our plans for 2020. And when we're ready and subject to getting the right deals, we also expect to be making announcements on deals for our secondary projects, being our assets in Canada and also the Duke Island project in Alaska, which we didn't mention. These are excellent assets, and I don't think we're getting any recognition for them in the market. It would be a good time to move them along at the right time. We are funded, we are permitted, we have a little under $3 million in the bank at present, and our share price has largely followed palladium price in recent months. We're doing a lot better than some of our peers. In terms of our capital ownership, that institutional piece has grown nicely in the past couple of years. We welcomed Sprott Asset Management, US Global, number of other recognizable names to our register, and we're grateful for that. And management, of course, owns a good 29% of the company.
I'll just take a couple of minutes here, but thought perhaps providing some context from the way we look at the market could add some value. I think the first point we make is that even before the market crash, whatever you want to call it, that we're going through right now, on a relative basis, commodities were at one of the lowest relative valuations in multiple generations. So this is truly one of those times where this is a sector that's deep value, and it has started to rise, but there's long ways to go from here. If we drill down into the period on this same chart from 1995 to present, just to look at the breakdown of that Goldman Sachs commodity index, you can see that it isn't just oil. Here's the energy subsector here in orange. Here's the base metals in the green, precious metals in the purple. So as a basket, we can see the whole cycle of the commodity from trough to peak. We can see that base metals had twin peaks and oil had a single peak associated with the global financial crisis. We saw precious metals peak later, and then they've all gone through this pretty challenging bear market over the last several years, but they have been bottoming out. We think that this cycle that we're currently in is more similar to the 99-2001 cycle as opposed to the 2008 market correction, crash, whatever you want to call it, for a number of fundamental reasons. The sector was coming out of a bear market and beginning a new cycle. And we think that probably comparisons are better there. In many ways, it feels like 1999-2001 has been this period that we've gone through over the last couple of years since 2016. If we look at valuations in the sector, if we look at the XAU as a benchmark of precious metals equities, we can see that these things cycled in a pretty consistent valuation range, and it's almost unprecedented. This is relative to gold, so we've already factored out the price of gold. Almost unprecedented how low the relative valuations of the sector. So even without a bear market, tremendous potential value as these things revert to the mean and back to more historical levels. If we take a look at a couple of instances of bear market comparison, the XAU again is our benchmark for precious metals equities. We've got the S&P 500 in red. This is the 1999-2001 period. We can see the XAU ends its corrections earlier than the broad general market and begins a multi-year upmarket phase, ultimately 200-300% gain in the XAU from trough to peak. If we look at the 2007-2008 market, a little bit different again. I'm not sure it's absolutely comparable, but again, we see the XAU hit its low early, S&P hit it later, and we see that this kicks off the beginning of a multi-year precious metals commodity based rally. Pointing out copper, I don't have copper on the chart, but the copper and copper equities bottomed a little later than gold and precious metals, but followed the same overall curve. And if we, XAU of course is large cap precious metals companies. If we break that down between large cap, mid cap, and small cap, historically the relationship that we tend to see, the large caps move first, the mid caps as shown here with the GDXJ move next, and then the CDNX venture index is what we're using for our small cap. But just to return to previous ranges, you'd need to see a 2 to 3 times increase in the GDX large caps, 3 to 4 times on the mid caps, and potentially a 4 to 10 time increase to get back to these previous cycle periods of higher levels. So we believe we're seeing between central bank activity, between what interest rates are in terms of real negative interest rates, we're setting the stage for coming out of a multi-year consolidation, and we're setting the stage for a multi-year bull market in the precious metals and commodity space. If we look at one indicator, if we look at long-term gold to silver and gold to platinum ratios, we've oftentimes seen that these extreme ratios correspond with near the bottom of the precious metal cycle or the commodity cycle. Interestingly, if you do gold to platinum, it almost like it really hits these key lows. When we look at the overall in terms of value, over 100 to 1 silver to gold and more than 2 to 1 platinum to gold, these are unprecedented values. Silver and platinum are multi-decade lows in terms of their value relative to gold. We don't think gold is overvalued. We think these metals are undervalued, and we think gold, as the largest precious metals market, will continue to move. That we're probably at the very early stages of a multi-year move, and that silver and platinum have tremendous leverage based on the extreme levels of their undervaluedness right now. And if we kind of step back and look at a longer term on this, on the I should say platinum, this is actually silver price. But basically, we can see that for long periods of history, we saw a ratio of around 20 to 1 silver to gold, and peaks around 100. We've recently gone past 100. So to return to the average between the 1950s and current would be about a 50 to 1 ratio. At $1,600 an ounce gold price, that would suggest a silver price of $30 an ounce in that range. For platinum, there are very few periods in which platinum has traded below gold. There have been a few, but right now at 2 to 1, it would project a platinum price that would be, by more historic standards, equal to gold or higher. So again, suggesting a huge move in price for both of those two metals. So hopefully those charts provide a bit of context of why we think, despite the current volatility, it's a good time to be looking at quality names in the precious metals and commodity space. We think there's a good chance we're going to see something unfold similar to the 2000 market, where we may see the precious metals sector bottom first, and this may very well be setting the stage for a multi-year bull market run.